Welcome back, everyone. Today we had another minor pullback in the market. I do think that these days tend to be the ones where most day traders and swing traders kind of lose their minds, where you just get some back and forth price action. But overall, today was pretty par for the course. We spent the morning taking some profit targets at varying risk multiples. And then from there, we just kind of took it a little bit slower for the session. And I was actually working on a double bottom trading setup, so I'll share that with you in a moment as well. But let's take a look at our box scores for the session and just assess today's damage. Let's see, we had up volume of 70.2% for the session, which is not bad at all, right? S&P 500 was only down 0.17%. The small caps actually finished out positive, which is pretty good. Our ARK fund was down for the session. Bonds were down. You can see TLT was down 1.17%. With the dollar index, we just added this onto the slide as well. Our UUP ETF was actually positive, up 0.17%. Throughout most of the year, when you have the dollar index trading in positive territory and you have the bonds in negative territory, that's not really a recipe for anything good. So I knew that today was not a day that I really wanted to rush anything. Most of these indices closed towards the lower end of their day's range, right? Volatility, however, did come down, which is good. It's not like we had a pullback on exploding volatility. The trend model remains at a -1. And that's the beauty of having a system that you're trading, where for me, this thing is almost like my get out of jail free card. With the trend model negative, I have full license to really just not be aggressive on the long side or anything like that. Let's take a look at our sectors. We had a nice move higher in this China tech ETF. KWEB was up 5.86%. I highly recommend, if you're watching these videos at night, take a look at our momentum dashboard every night. And this thing is ranked in terms of momentum, of course. So things that are at the top of the list, that's where money is rotating into, and vice versa. If something is at the bottom of the list, that means capital's rotating out of that. I remember earlier in this year, this happens to me every so often, where something will move into the top slots, and I'll be like, it's just Chinese tech. I don't really believe in it. I'll have some thoughts about the group, and that'll prevent me from taking a long entry in the group or adding any exposure. And all of a sudden, before I know it, such as XLE Energy, it'll be like, wow, it was up again today. It was up again today. Then before you know it, the group's a little bit overextended, and suddenly you're like, well, now I really can't enter, and it can just get you off on the wrong foot. So for the China tech names, we were actually pretty proactive. Once we saw this start to move towards the top of our list, we added some exposure here, and we were able to take some targets into the strength today. Our gold miners were also in the number 2 slot. They were up 3.11%. Definitely another group to watch. But you can see overall just very mixed tape in terms of our sectors. And our heat map as well. This is pretty funny. Apple was one of the worst performers on the session. I do believe that it has gotten wrapped up in the Tesla Twitter drama. Apparently the latest is that Elon Musk, he's basically saying, like, if Apple messes with Twitter in terms of the App Store, they're going to go ahead, take the nuclear option, and start creating an iPhone competitor. Who knows if that'll happen? For right now, it's just some theater, but it does seem that that dragged Apple down a little bit lower throughout today's session. And in terms of our trades, as we mentioned earlier, all we really did was take some profit targets. We closed out some of our Pinduoduo common shares at over 2 times our risk budget. And it was awesome. We had some good comments on yesterday's video. There was a really good one that someone left, and it was all about like how your risk reward on your trade should be evolving throughout the course of the trade. So thanks so much for everyone that was commenting on the video last night. Really appreciate it. So yeah, we closed out some of the PDD, closed out some of the AEHR, and we closed out Shopify as well. Let's see if we can put those charts up, or if my machine is just going to quit on me here. Okay, here we go. So let's take a look at Pinduoduo. And this one gapped higher. And we discussed in our trading room right off the bat, hey, this thing, we're definitely going to take a target here. Because this green line, this is our 5-day EMA. And whenever an asset gets super extended away from the 5-day EMA, I pretty much go in with the mindset that, hey, this thing's probably going to retest it. So I went ahead, closed out some more of my PDD. I only have 25% of the position left. That said, I am willing to keep that remaining runner piece on, because I do believe that these Chinese equities, they could have a much bigger run in store over an intermediate term time horizon. Like, look at this. This is our weekly chart. This here's our yearly value area. And look at us. We're poking right back inside of this yearly value area, which is great. So I do believe in the intermediate term. Could we end up retesting this yearly point of control at $93.27? Is definitely possible. But I think in the short term, we are a little bit overbought for some of these Chinese equities. So we did close out some PDD. AEHR, for this recent run higher in the market, this was definitely our best trade, which is great. We ended up adding AEHR in the 15s. Down here, I believe it was, as this thing was starting to come out of consolidation. And we had just been riding it for the past couple months. And this thing made a dramatic move higher, almost over a 60% advance since we put it on. So I closed out the remaining 25% of it. Sometimes when the market environment's changing a little bit, you can really start to get attached to the stocks you own. And you don't want to get rid of them. You don't want them to run without you. But for this, I was like, you know what? We earned almost 10 times our risk budget on this trade. And that's all you can ask for. All you need is a couple trades every year where you earn 10 times your risk budget. And that's going to make your year. The only thing you also have to make sure of, though, is that you don't have a bunch of trades where you lose 10 times your risk budget. So long as you're sticking to your risk budget and you allow yourself to have 1 or 2 outliers in the year, you're going to do great in your trading. So let's see, we had AEHR, then Shopify as well. This one, I believe we took this one off. It was like for 5 or 6 times our risk budget, which is great. I closed out 50% of it. Then the session, things started to get a little bit dicier. I closed out the other half. So this was a great trade. We added this one. I believe it was on this candle here. Yeah, right after the company reported earnings. And then took this one off into the strength today. Let's take a look at these broad market indices. At this point, I have a much bigger cash balance. And really my goal moving forward as a trader is I want to make sure that my mindset and my posture in the market is just very fluid. I don't want to be that guy who's like super opinionated on the market and like thinking I know where it's going to go. Once I make a decision, then it's all about what's the next decision. I don't want to be anchoring on anything prior. So I do think it was good. We took some risk off the table. Well, let's see where the S&P 500 actually is right now. Do I think there's as much short-term risk as 3 sessions ago when we were just very extended away from the 20-day SMA? No, not quite as much. But take a look. We're trading below that 10-day EMA, and it does look like we could have a retest of this 20-day SMA. But if we get there, now that I have a much bigger cash balance, that's where I could actually get aggressive and look at things as buying opportunities. If that happens, I won't be like, in the fetal position, curled over or anything like that, which is good. Let's take a look at our hourly chart. Check this out. If our toss wants to go, I'm still in New York, so I'm working off the laptop. I'm actually going to be heading back to the Philly area tomorrow. I'm going to be taking an Amtrak, heading over there. And yeah, thanks so much for all the well wishes. I mentioned yesterday my mom had her surgery. She did awesome in the surgery. She's actually feeling really good today. S&P 500, we're trading down to this weekly value area low at 39.52.25. This is definitely a good level to keep in mind for tomorrow's session. We do have Jerome Powell that's going to be giving a speech at 1:30 p.m. So definitely keep that in mind. That's technically a binary risk event. Do I think Powell's going to say anything that we don't already know? Absolutely not. But it is an event either way. Perhaps he says something no one expects, whatever. You always got to respect these events. But yeah, I think below 39.52, that's where things just start to get really ugly and start coming undone in the market. If the market is going to remain in this more bullish sequence, I think we have to get the balance at 39.52. So I think this is a great level to use as a pivot into the end of the week. All right, let's take a look at the NASDAQ. NASDAQ has been doing a little bit worse. This thing is really sluggish. We pulled back to this top of value and we're above the 20-day SMA. Let's take a look at the Russell 2000. This one showed some nice relative strength today, actually. But the Russell, see, this looks very sus. Look at this. So we trade up to the 200-day SMA. We're above it. We get some long upper wicks. we make a lower high, then we end up cascading a little bit lower, and we fail at the 5-day EMA, and we still close below that 20-day. So it's not me saying, oh yeah, the market's going to crash now. It's definitely going to go lower. But all it's saying is now, in terms of where I believe the market could go, it's very up the middle in terms of, any sort of edge directionally. We're just in no man's land. So when we're in no man's land, that's not when I want to be pressing and pushing the envelope. I'd rather wait for the next sequence and the next wave to catch. The Dow Jones actually held up pretty well today, which is good. Our ARK Innovation ETF. I was just ripping on Kathy yesterday. Take a look at this thing, down 0.54%. We're still holding on to this bottom of the monthly value area. Who knows? I think if we get a run on this thing into the end of the year, it's really just like a 50-50. Who really knows? If we get some rally of beaten down horrible companies, maybe this one moves higher. And let's take a look. Heading into tomorrow, I am going to do some more homework tonight. But one of the names that I have on my list, we have SMA Corp. This is a name that I really wanted to enter, got a little bit too extended away for my liking. And look at this, now the 20-day simple moving average is beginning to catch up to price. CrowdStrike got obliterated in the post-market. CrowdStrike is actually a name that I really like. It's a high-flying growth stock, but it has really nice free cash flow, and it is growing like gangbusters. They did have a slight miss on their earnings, however, and the stock is down almost 20% in the after hours. This could be a name that I sell some put options on, though, heading into tomorrow's session. We'll see how it trades tomorrow. We did have in the after hours this HZNP really just moving to the upside. This one, apparently there's like a buyout rumor, and this thing just absolutely lifted. But today, for the most part, here's what we were working on. So I'm going to share this with you. You're a viewer of our YouTube channel. Really appreciate you. Make sure you go ahead, click the like button on the video. If you like this content, hit the subscribe button. This is our active trading Discord server, and this is what I was working on earlier today. It's always good to kind of map out your trading setups, right? You don't want to just be going into the session like willy-nilly trading stuff. So this is actually a setup that I want to use a little bit more next year. And it's the double bottom setup, where you just get a low that's put into a stock, put into an ETF, put into a market. You get a second low at a pretty similar level. And here's me just trying to define some criteria for this setup. Really just what I would like to see. And the idea is, if you have like a Rolodex of trading setups that are similar to this, where you have all your criteria written out, then suddenly when you're heading into the trading session, rather than just being someone like, and this is always, I never want to be this trader. I know so many of them, and to be honest, it's just like cringy. The traders that come into the day and they're like, I want to make some money. Let me find a way to make money. And they're just kind of looking at everything in the market all at the same time, and they're really just making it up as they go. You want to get to a position where you have maybe like 3 or 4, we'll call them moves, we'll call them plays, we'll call them setups, whatever it might be. You have a few of them that you really like that work pretty well for you. And as you're looking through the market, it might be the night before, you go, okay, let's see if any of my setups are presenting themselves. And if they are, then you have a trading opportunity. If they're not, then you can really just turn off your screens. And you don't have to be looking for anyone else's opinion online. You don't have to be scrolling your Twitter feed. You don't have to worry about missing anything. That's really the goal for Pristine Capital. For all of our traders, we really just want to take a more professional approach to trading and just, go by your setups, go by your trading plan, and find success that way. You're not going to find it by like 0DTE options or anything like that. So yeah, this is what we're working on today a little bit. Heading into tomorrow, I don't have high expectations. The trend model is negative. We got Powell coming up, so that's going to be really cool. Can't wait to see that. With that being said, that about does it for today's market recap. Thanks so much for tuning in, and we'll be back in the Philly area tomorrow. Thank you.